my name is Khan, and in this next chapter we will talk about imbalance and IFC. What is IFC, what is imbalance, and what is order block. So first of all, I would like to start with imbalance. Actually, imbalance is also known as a FVC, inefficient price action. There are different names. So let's start in a bearish structure. As you can see here, this is the last candle before this drop. So this is our last candle's low is here, extend here, okay, and the mark the next candle, next second candle, which is here, high is here, right? So between this low and high, this gap is called imbalance, FVC, inefficient price action, right? So this one is a proper imbalance, correct? And sometime what happened, market did not create this imbalance and fill this imbalance, so that's is not called imbalance, okay? So in this case you can see here this low and this high is here, still imbalance, correct? And maybe this candles extend here, okay? So this imbalance known as like this, okay? So this is a minor imbalance but still imbalance, okay? So this one is also valid imbalance and this one is also valid. Now let's move little bit lower. As you can see here, this low and this high is already mitigated, okay? So there is no imbalance left. As you can see here, there is no imbalance, so this one is also mitigated. Same thing apply in a bullish market. As you can see here, this high is here and low is here, so between this high or low and this one is called imbalance, correct? And next is high, this candle's high and the next candle's low is here, so this one is also called imbalance, right? And this imbalance can be a different in a size, like this. Here you can see this is a larger imbalance, this is a minor imbalance, and same thing is here, and this is a medium imbalance, this is a little bit bigger imbalance, and this imbalance can be more bigger or smaller, like here I'm showing you exactly, maybe imbalance like this, right? So it's depend on the market strength, momentum. So as you can see here on the next, this high and this candle's low, which is here, so there is no imbalance, already mitigated, so this is a not imbalance, correct? So on the extreme point there is no imbalance, and same thing is here, there is no imbalance and this is an imbalance. So this is a simple step to identify the imbalance in a bullish and bearish market. Let's switch into the real chart to identify the imbalance. This low, candle's low, which is here, okay, and this candle's high, which is here, so this is a imbalance between this candlestick, right? Okay, and same thing is here, the next candle's low and next candle's high between this zone, this is also known as a imbalance, correct? And the third zone is here, this is a minor imbalance, correct? And now you can see in a both, in a three zone, this one is a here, correct? And here, okay. So now you can see three zones are looks differently, but there is imbalance. On the last one is a minor imbalance, and this one, second one, is a medium imbalance, and on the extreme this is a higher imbalance, right? So these are imbalance. If you notice here on the next candlestick, which is high is here and low is here, so this is already mitigated, so there is a no imbalance, right? So this is an imbalance and there is a no imbalance between this high or low, right? So on the next point you can see here, this candle's high, this candle low, and this candle's high, next candle, and this is a imbalance, and also known as a FVC, as I told you, and inefficient price action. So there are different name, but everything work similar, right? So this is a imbalance, and there is one more imbalance below it here, correct? So this one is also imbalance, and if I mark here and this is here, which is already mitigated, so there is a no meaning to mark this zone, right? So this is a not imbalance, correct? And same thing is here, everything is a mitigated, right? Even you can see here clearly this mitigated here, and this is a mitigated by this one, and this is a mitigated by this one. There is no imbalance between this zone, right? And there is still some imbalance here because this candle's low and this candle's high between this, so already filled this gap now. So this is now not longer to valid imbalance, right? So this is a imbalance in a bearish market. Now let's move into the bullish market, and this is a current price action. Okay, so same thing apply in a bullish price action. As you can see here, if I mark on the bottom to top, then you can see here clearly this candle's low and this candle's high, this candle's high previous and this candle's low, and between this zone this is a imbalance, correct? And same thing at the current price action here, this is also imbalance, this is also imbalance, right? So this is a simplistic way to identify the imbalance. Okay, it doesn't matter that market momentum is a bullish or bearish, you have to identify the gap between both candlestick, as I mentioned, right? So now let's move on to the next topic, which is order block. So this is a order block, that how we can identify them. Actually, order block is a specific candlestick which we can see on the extreme and middle of the move. So these are last buying candle before the sell is called order block in a bearish market, and last selling candle before the buy in a bullish market is called also order block, and this can be between of this move, and let me show you how. So first thing is, to identify any order block, price must be break of the structure. In this case, as you can see here, market is a bearish, okay, and generally these our break of structure, right? So market momentum is a bearish, so where is our order block? Last buying candle before the sell is called order block. So in this case, what is the last buying candle before the sell, which is here, right? So this is our last buying candle before the sell, which is here, correct? So this is our order block, bearish order block, and we will expect price go higher and then push downside to fill this order block, right? So price push higher to mitigate this order block before go downside. So this is called bearish order block, and order block may be between of this move, for example here, okay, and maybe market push higher and then market can make order block here also, okay? So it's depend on the condition, it's depend on the situation. I will show you on live chart that how we can identify them, okay? So this is a bearish order block, and same thing apply in a bullish order block and just reverse of the bearish order block. So as you can see here, this is a bullish order block. When market break higher high in a bullish market, so you have to see that where is the last selling candle before the sell. So now you can see here on the extreme point, this candle is the last selling candle before this buy move. So I will mark this zone as a bullish order block. And one more thing you need to understand, order block must have imbalance. If there is no imbalance, so order block will be not valid, right? For example here, if this candle mitigate this order block already, so this order block is not valid to mark this zone, correct? So because this order block is already filled, right? So before to mark any order block imbalance, there is imbalance must be. We can expect a bullish scenario in a bullish market, something like this, to mitigate this order block and again push higher. Okay, so this is a basic and simple thing to identify the order block, and this is the easiest way to identify. First, identify the trend. If market break in a downside, okay, then you have to wait to see where is the last buying candle before the sell in a bearish market, right? So that's called your order block, right? So this one is a called bullish order block, and order block must we have imbalance. Imbalance, you know very well, I mentioned already, right? Now let's move on the real chart to see how we can identify them. As you can see here, market break the structure, market momentum is a bearish. So as I already mentioned that market must be break the structure. So market break the structure after broken this low. So you have to see where is the last buying candle before the sell. First move is here on this level. As you can see here, there is a last buying candle before the sell is here. But as you know, this is already mitigated by this move. Okay, so this is a not still, this is a not valid longer, right? Because it's already mitigated by this move before this break of structure. So after this, we can see there is any last buying candle before the sell. Actually this candlestick was last buying candle before the sell, but there is no imbalance, right? So how we can mark exactly and how we can refine it? You have to see the next candle, there is any imbalance between this candle. I think it's already mitigated, so there is a no imbalance, right? So as you can see in the next candle, which is here, this is a imbalance and with order block, correct? There is a minor imbalance and order block, so this one is a called valid order block, which is here, right? So this is an imbalance and this is an order block, so we can sell here. This is an extreme point where we can sell, and the next zone when we can expect. So this is a last buying candle before the sell is here, right? So this is a last candle before the sell, but this minor big already mitigate this candle. So what we can refine it, okay, and we can refine it here like this, okay? So this can be your refinement order block, correct? And this is your another order block, which is here, because this is the last buying candle before this move, right? So there are different order block. So how we can choose which order block is correct or not, I will show you and I will teach you in next upcoming chapter about liquidity, right? So this is a general thing. You have to see that how we can identify the order block actually, right? So we can see here market push downside and take some reaction on given order block and then push downside. So generally we can see here already this is a another break of structure is here, correct? So how we can identify the another order block in a bearish market? So where is the last buying candle before the sell? You have to mark first thing, this was last buying candle before the sell, which is already mitigated, right? So this one is already mitigated, so there is no longer valid here, right? So this one is already mitigated. So where is the next zone? Next zone is here, this candlestick last buying candle before the sell, which is already mitigated by this move, correct? So this is also not valid. So where is the next candle? This candle can be your next order block, which is here, right? Because in this candlestick you can see there is still imbalance, correct? So this is a still imbalance, right? So this is a simple and easy way to identify the order block in a bearish and bullish market. Okay, so you will get a lot of idea to see in a ebook, as I mentioned, and diagram, everything. Okay, so now let's move on the next point, which is called IFC. What is IFC? IFC means institutional funding candle. Which candle took the previous candle's low or high? It's called IFC. And this is a little bit part of the liquidity, but this is a very important, you have to understand. It looks like a order block, but there is a minor difference, but this candle is a very powerful compared to order block, right? So how we can identify them? First thing, you have to identify the order block there is necessary. Okay, so as you can see here, this is a bullish market and this is our break of structure, correct? And this one is your break of structure and you have to buy. So when we can buy? Some people mark this is a order block. No, this is a not order block. This candle is not last selling candle before the buy, right? Why? Because this candle's already taken the previous candle low. Okay, so as you can see here, this is a taken out previous low and close above this high, right? So this candles close above this high, so this entire candle is a called IFC, institutional funding candle, correct? And this candle is more powerful compared to any order block, right? So we can buy here to push higher like this. Okay, so this is a valid entry criteria for the buy on IFC candle, right? Alright, as you can see here in a bearish market, this is a bearish market, market break the structure is here. So first thing, you have to mark the order block and IFC. So how we can identify and how we can identify difference between both of them? So first thing is, on the extreme point, this is a clean order block, right? And this is a order block. Why? This is a last buying candle before this drop, so we will consider this as a order block. And look at the middle of the move, we can see market take the high like this and close below it. So this move is a called IFC, institutional funding candle, and now you can see market tape on this zone and push downside extremely, right? So this is a difference between order block and IFC. I'm not saying that you need to wait only for IFC. You can trade also in an order block, and we will discuss in a later in next upcoming chapter in a details. So this is a IFC and this is a order block, right? So this is a main difference between order block and IFC. IFC is a more powerful compared to order block, right? So same thing apply here. As you can see here, if you know that this one is your structure break and this has been liquidity taken out, I mean previous high taken out, and this will be your next order block, I mean next IFC in another time frame. Still there is no imbalance, but in another time frame it's still imbalance. So we can see market tap on it and then push downside extremely. So there is a difference between IFC and order block. These are really powerful candlestick, and I'm going to show you some bullish scenario to mark the actual IFC. So this is another example in a bullish market. As you can see here, market break the structure. After break the structure, you have to identify the order block and IFC. So in this move, this is a break of structure, push higher. Where is order block? Order block is here, right? And now you can see order block trap here, but market take this IFC candlestick type here and push higher. So it's more powerful compared to order block. It's you can say it's the latest version of the order block. But why? Because this candlestick take the previous low means take the previous candle's stop loss. Okay, so this candle is more powerful, that's why. Okay, so these are things you have to understand, and you have to mark the correctively order block, imbalance, and IFC, break of structure. I hope you learn a lot of new valuable thing in this episode. Let's move into the next chapter, which is I will talk about what is SMC and what is retailers and how and why they fail. And let's switch into the next chapter. Thank you.